Assalamualaikum everyone. Welcome. This is Nuzhat Sharmin, student of economics, and my regi number is 2019231015. Today I am going to discuss with you a topic which name is balance of payment. As you can see that it is an essential tool for analyzing a country's economic health. Now let's we understand what is balance of payment or BOP. From the definition, we can see that it is a systemic record of all economic transactions that take place between the resident of one country and the rest of the world over a specific time period. In fact, it measures all the monetary transaction within a certain period of time. It consists of export, import, and all other goods and services as well as transfer payment like foreign aid and remittance. Its main purpose is about the insight to a country's economic health and global interactions. Now moving to the next slide, we can learn the main targets of BOP, and they are divided into three categories: current account, capital account, and balance of current account, capital account, and financial account. Now look, we can see that what is current account. Current account is actually which is deals with goods and services, income, current transfer across the international boundaries. And moreover, current account deals with trade balance. Trade balance means the record of balance of trade in goods and services, mainly export and import. Services includes from the service from tourism, finance, and consulting. And income balance are the tracks current learning from investments such as individuals and interest. Current account is about the transfer like foreign aid and remittance. And the next part is about the capital account. Capital account focus on the non-financial assets and capital transfer. It involves the transfer of asset between governments. Like non-financial asset covers the non-financial assets, patent and copyright. And the last target category is about the financial account. It's about the direct. Its three components are direct investment, portfolio investment, and other investment. Now we will briefly discuss about what is direct investment. Direct investment shows that the physical asset or the ownership asset in foreign enterprise. Portfolio investment means that the purchase and the scale of securities such as stocks and bonds. And other investment emphasize on loan, currency deposit, and other financial asset. And again there is reserves assets, the tracks change in country's official foreign exchange reserve. And mainly it allows to gain the deep insight into a country's economic trade dynamics and financial stability. It's informed the decision making and addressing international economic imbalance. Actually, balance of payment is always expected to be in equilibrium, meaning that the sum of all these components should be equal zero. When a country has a surplus in its current account, it is typically corresponding to a deficit in the capital and the financial account, and vice versa. Now moving to the next slide, we will discuss about the balance of payment transaction. Actually, balance of payment transaction are huge. Mainly the term is about the economic transaction, means the transfer from one economic agent like individual business to another of an economic value. It includes both real transfer and financial transfer. And Again, we can say that economic transaction may involve either all the countries exporting, importing, and net balance, and many more. It's two terms believed in to be equal. There are five types of economic transaction in BOP. First of all, an exchange of goods and services with financial quid pro quo, exchange of goods and services for goods and services, exchange in financial item for financial item, transfer of goods and services, transfer of financial asset without no responding. Now we will talk about the pair transaction. BOP accounts allows a simple rule of double entry bookkeeping. Every international transaction automatically enters the BOP account twice, once as a credit, once as a debit. Again, we can say that a surplus in BOP is indicate that the country is exporting more than it's importing, and it net lender to the rest of the world. Deficit, on the other hand, suggests the country is importing more than it's exporting, and it is a net borrower. This imbalance can have economic and policy implication and affecting nations' currency, exchange rate, trade policies, and many more. And we will see that credit means the country money will enter the country, and debt means the country will leave the country. And now we will see an example of it, that PC purchase means if you buy a laptop or something for your study purpose or something else, the money will be in your debt account. On the other hand, the bank sales of bank deposit by Sonali Bank, financial account, and BD asset export, like if you export something from other country and it will be on your account, like on your account as a credit. Thank you everybody for listening to me. I hope the concept of BOP is clear to all of you. Thank you. That's all. Goodbye. Allah Hafiz.